Good morning, and welcome to the Financial Pillars All About the Money podcast presented by Our Neutral Voices Media. Our show is all about helping our audience understand money, mindsets, and tap into the economic knowledge that build financially secure individuals, families, and communities. So whether you're tuning into our show to learn about budgeting, building credit, investing, or starting your own business, we're here to break down the knowledge in a real and relatable way. I'm your host, Ryan Lepird, private banker with Star Financial Bank.
JJ Foster, Lake City Bank.
Terrence Bush, Universal Business Banker at Greenway Bank.
And we got a special guest today. I'm going to introduce you, Mark. I'll get to it. We got our friend from DR Financial, Mark Ellington.
All right. It's nice to be a special guest, not just a guest.
Absolutely. We're a special guest now. So, Mark, before we get started, you want to take us in with prayer?
Sure. Lord, we just invite you in this morning. You tell us when we receive you, we have your mind. So we pray that you would empower each one of us, Lord God, that we would speak words of wisdom that would bring about transformation in people's lives. Amen.
Amen. Thank you for that. So we got Mark on the show today. He's going to kind of talk to us about his expertise in investing and state of the market and stuff like that. But before we get to that, let's recap. We had our last session of the mental state of mind workshop. I unfortunately wasn't there, but you want to fill us in on it?
Sure, yeah. Terrence was there. He helped host, and Mr. Steve Schumacher from Lake City Bank was on board. Packed house, good audience, a lot of good feedback. We talked about budgets and savings, a lot of real life situations. We utilized some examples, a lot of good audience feedback and things. So people went away with a lot of good knowledge, and then, as you know, we gave away our TV as well, and it really was special because our TV winner actually came from a young lady who's going through Habitat for Humanity. So she's gonna get a new home and have a nice 65-inch to put that TV in. So. And she was a young lady that had attended all 3 sessions prior to. So it was real special.
Wasn't that one of the catches to win the TV? You got to be all 3, or?
You actually, your eyes just increased.
Gotcha.
The better opportunity to win. So, but gotcha. Yes. Terrence, you got anything you want to add?
I will say one of the repeating themes from the, of course, event on Saturday was a lot of interest in the current CD rates, of course, so that they could potentially save more and earn more. Or with the rates, of course, dropping and changing, of course, like that, people are looking to get a larger return on their investment. So, of course, it was nice to stress the importance of shopping around through credit unions and financial institutions, banks included, to pretty much just find out which relationship would be the best for you that's going to give you the best return.
Gotcha. What was the topic again?
Balancing budgets and saving shorts.
Gotcha.
Yes.
Yep. And that's the last one for the session. So we'll start.
We'll see folks in 2026.
2026.
Yes, sir.
So,
and, for everybody that's been out, you talk about the lead-in, everybody that's been at our workshops, we have the legendary Mark Ellington. You guys hear all the examples and the stories that even though he's not there, physically, he's always there spiritually, and his stories precede themselves. So
awesome. Mark, good to have you back to the set.
Thank you. Great to be here. Great to be here.
Yeah. Business going good for you?
Yes. It's a busy time of year for us. We're meeting, it's year-end. We call them year-end meetings, where we're meeting with individuals and business owners to help them prepare tax-wise, to make sure they're set financially. We don't like any of our small businesses to go through the end of the year without knowing where they're at tax-wise and being prepared.
Gotcha. So, got you on the set, kind of talking about the market, investing, that type thing there. And I think we've kind of had a little bit of a wild year here, right? With the new presidency. First of the year kind of started off a little rough with the market and kind of rebounded. Talk to us a little bit about that.
Well, yeah, it's been kind of up in the air, knowing, really what to do. I mean, it's kind of new ground for everybody. But again, if you're diversified, you're going to ride things out regardless. For instance, I do safe money, which would be annuities or life insurance. I do some real estate. I have money in a money market where if I see a good deal, then I have that liquid. We always want our people to have 30% liquid, and then I have some in the market. So I try to stay diversified regardless of what's going on. But actually, overall in the market, it's not been that bad. I mean, can be a good year.
Yeah.
So, but yeah, if you're diversified, you're going to be able to ride anything out. because you don't have all your eggs in one basket.
So that's always the key with investing, right?
Right.
Being diversified in different
Yes.
things. Yep. Any effect? How did the government shutdown affect the investment in the market and the conversations you're having with your clients around that?
Well, it leaves a lot of indecision with the tariffs and everything. Everybody's kind of indecisive as to how do I prepare for the future, because we really don't know how this is all going to shake out. We'd like to think it's going to be positive, but you don't know for sure. So to me, it's brought reluctance in people really wanting to step out and take a lot of risk. So it's just kind of a lot of people have backed up. I've seen people back up and just say, I'm going to sit here, Mark, and wait and see how things sit. I got a lot of people sitting in money markets kind of waiting to see what's going on. But real estate has still been a good investment.
Is that like taking off? That's what I hear about real estate. Is it seemed as increased? Is that correct?
Yeah, I think it's obviously backed off from a couple years ago. I mean, you guys in banking know, my gosh, when those rates were like that, it was nuts. But it's still good. I mean, it's good if you're buying a house. The rates are still what used to be a comfortable rate.
Yeah,
You know, we're
so used to low rates for such a long period of time. Now they're actually back to normal, and it seems high.
Yeah, everybody thinks it's high, but as far as buying properties and being an investor, there's still lots of good deals out there and flipping houses or rentals and those kind of things. So it's still, that market is always there, the real estate market, as far as flipping or investing in rentals and things. But yeah, real estate's been good.
Okay. And when we hear stuff like the Fed has cut the rate, how does that affect investing?
Well, when you see, I mean, you're constant, and I'm not huge in this area, but Ryan, you're probably better in this area as far as the bonds and those kind of things. But you're watching the rate cuts. For instance, my money market that I use has bonds in it, so that I like to do that. Then it lowers my taxes on just the money market. But as far as cutting the rates, for most people, I don't think, in my realm, that's not a huge deal. They're consistently investing. The majority of our people they're not buying stocks on and off. They're just have a position in the market that they're going to consistently stick with. So I would say, for me, as far as what that does for the average person we have them diversified, and they're not buying a lot of stocks and really looking at the market that way. A lot of what we have them in is platforms. There's certain platforms you're picking that have different stocks and different variety of things in them. So you're picking a platform based on the risk you want to take on.
So when you say platform, you're talking about like high risk, moderate risk, that
Yeah,
type thing.
yeah, it's got a choice of stocks in it, where the average person, I mean, I know some people that are trading all the time, but they're not using me. They're doing that on their own. The average person
Probably
I have,
your advice, right?
yeah, I don't have good advice. The average person we look at is what's the risk you want to take. Here's a platform for conservative, moderate, or high risk, and then they know getting into those that's where they're going to be, and those are, the stocks may change in those, but again, you're basically investing in a platform.
Okay. And you took my next question, because that's what I was going to ask. Somebody that comes to you that isn't a seasoned investor, where would you start them at? And you just walked us through that.
Well, I'm always asking, what's your risk ratio? We're looking at risk ratio. What are you willing to look at as far as how much you want that you're willing to let do this? How much do you want that is under no risk, and then moderate risk? So at my age, I'm 73. A lot of mine is no risk. I mean, I got annuities that, the worst I can do is zero. And again, I've got, my risk is going to be a lot of real estate and some in the market. So we're always looking at risk ratio and then adjusting that. Let's say all of a sudden your ratio has gone up. You're like, oh man, I've got too much conservative, you know. So maybe I'm at 90 because my low risk has done well. Then I will move it over into the market. So that's what we're always monitoring is what is your risk ratio, and then you're adjusting. But again, it can depend on what you're in. If you're in real estate, that's risk. If you're in the market, that's risk. You know, you might get CDs, money market, and then annuities or life insurance would be low risk. So that would be all of our clients that we're working with that are working with us, doing everything with us. That's what we're monitoring all the time is the risk ratio once they determine what that is. Now, a younger person, they're going to be maybe 80% risk and 20% in the safe side.
So,
but again, I'm also looking, if you're an entrepreneur, I'm saying we want 30 to 40% of yours liquid because you're ready to step into an investment. Maybe it's property or have people looking for a business to invest in. So it depends on what their goals are as to how they're going to be situated.
as an entrepreneur, your investment's not necessarily the market base; it's more or less your business base,
Right.
Like what you want to do.
Yeah. Because
You-
I'll have a lot of people where we'll look at they'll say, do I want to put money in a IRA, you know, or a 401k? Well, if they're an entrepreneur, they probably can make more money taking that money and investing it rather than putting it away and tying it up for a large number of years. So that's where we're a little different when I'm working with somebody. We're not trying to get all their money, you know, in some investment. We're looking at what are their goals and setting it up that way.
Do you have a set rate? Like you said, 30% liquid. You want people to keep it. I mean, what's the general rate for that money that's liquid?
Well, we're normally, again, depends on their goals, but normally we're talking to somebody about having 30% liquid that you could get at within a couple of days. Let's say all of a sudden you need a roof on your house. You know, this day and age, that's 20, 30 grand, possibly. So where are you going to get that money? Then when we're doing that, sometimes we're looking and saying, okay, where's the best place to get that money tax-wise? If we liquidate an investment, maybe you got an investment that's down. Let's liquidate it, take the loss. But lots of time, for me, that money is in a money market where within I can wire it if I need to. And there's some really good money markets out there. So yeah, but it depends. Every person's going to be a little bit different, but we start at, let's have 30% liquid. So no matter what happens, you should have enough money to take on any situation that arises.
Emergency comes up, job loss, something like that.
Now, it may be higher for an entrepreneur that, like I said, that's looking to invest more, maybe real estate, or they're looking to say, hey, I'm looking for a business to invest in.
When we're talking about like risk tolerance, can you kind of talk to us about the mindset of, you know, being a little bit more aggressive for younger, then middle age, and then kind of close to retirement? Talk to us about that mindset, how you walk your clients through that.
Well, for a younger person, we're looking at, hey, you got a lot of time. So don't panic over a downturn in the market. So that's different than somebody my age. If I'm at retirement age and I've got on a fixed income or, you know, really dependent on that income, I get a downturn and all of a sudden I'm pulling money monthly, which is really lowering my finances. So it's going to be different. The older you are, normally you're going to look at much less risk because your income is kind of settled out and you're more on a fixed income or steady income. So you don't want those downturns. If I'm younger, you know, the market, by and large, you're going to ride out the market and do well. But the biggest thing with the younger people, I'm constantly telling younger people, and this is, I don't know who did this, but if you'll do what nobody else will do right now, then at age 50, you're going to have what nobody else has. Now, that's hard with the younger generation because they want things. But I got people that are in their 50s that got choices that nobody else has because they lived a reduced lifestyle, a comfortable lifestyle, but still were consistent in their investment. I got several people that probably never made more than $50,000 in their life, and are millionaires because they consistently, you probably see it, Ryan, you consistently put money away and lived comfortable, but below their lifestyle. I got one guy that I'll say, he's sitting on $2 million, lives on 50 a year. I say, get a bucket list. Well, I don't have one, Mark. I said, I have one. Let's do my bucket list with your money.
Yeah. You can come tag along with me.
Yeah.
Yeah. So when we're talking about, because I think what history has proven with the market, like over time, it's going to go up. Just does nothing but go up. But there's going to be bumps in the road there, right? So just depending on where you're at in life, if you're younger, you can withstand those bumps in the road. But when you're older, you're close to retirement, you may not have enough time to recover from that bump to the point in time when you need that money, right?
Right.
Yeah, so that's kind of the mindset when, I'm assuming you're talking to your clients and doing a risk evaluation on it, where they want to be is, that's probably the advice I'm assuming you're giving, right?
Yeah.
Yeah.
I mean, again, the older you are, the less risk you're normally going to want to take. Mm-hmm. But again, if I have somebody that wants to take risks, that's up to them. My job is just to give advice.
Mm-hmm. Yeah.
I want you to repeat that story again, because you know what? That fits everything that we've been talking about in our workshops. When we talk about not keeping up with the Joneses, we talk about being disciplined. To me, that's profound. You just said folks that haven't made, more than $50,000, in a year, and they're sitting there, are millionaires.
I got a guy that started out working in the mailroom, stayed with the same company, and never made more than $75,000, and that was at the later end, and maximized his 401k, retired at 50 with $2 million, lived below their means, raised their kids, did all that stuff. But I got lots of stories like they're rare, because I got more stories of somebody's made. I got one guy, a real estate agent, made six figures most of his life, comes in and said, Mark, I want to retire. He had 2 rentals and his primary house and basically nothing else at 65.
Mm-hmm.
I mean, that's a sad story.
Yeah. You mentioned 401ks. Can you kind of talk to us a little bit about like your advice to people when it comes to starting investing through just a brokerage account, contributing to their work 401k, IRA, traditional, Roth? What your thoughts are there?
If I have a 401k and the company's going to match, I'm going to max that out.
And real quick, for our listeners out there that may not be familiar, 401k is
would be a retirement account with a company.
Work-sponsored retirement.
Yeah, work-sponsored retirement account. And normally, whatever you put in, they're going to match up to a certain amount of money. And the people I've seen really successful at their business have maxed that out, have done whatever they could do with the company matching it. And again, you're doing that and then living on what's left. So that ought to be the first thing you do, which is pay yourself first. That's a good thing to say, is pay yourself first. What are you putting away? Are you investing in yourself instead of buying toys and ending up on the back end of life having nothing, which I see all the time, which is sad. And I get a lot of young people, business owners coming in saying, Mark, we want to start a business. And I'm constantly saying, get a plan, work your plan. How much are you putting away every year for you? And this might be you're putting away for college, or maybe it's just, you're going to pay your house off. What are you doing to get yourself in a good position so at retirement age you got choices? You don't have to work. I love what I do, so I continue to do what I do because I love it. I don't have to. And I started late in life. Nobody told me all this stuff early on, and I started late in life. But it's exciting to see people that reach that age and have made choices and haven't made a lot of money, just had a plan. And that's the biggest thing. We run towards what we see. So if you set up and you have a plan and you see it, then you're going to run towards that plan. And then I advise you to get somebody in your life that will encourage you and hold you accountable to do that. Get an accountant or a financial advisor that isn't all about investing your money, but it's about you. What do you want to do? How do we work your help you get a plan, then I'm going to help you work your plan. I mean, I got people that come in and they don't want to tell me that they bought a toy because they know I'm going to hold them accountable. I had one guy that had a business and he comes in, Mark, why are my taxes so high? And we just start to look, well, he bought a boat, didn't tell me he bought a boat, didn't buy it correctly. And because he knew I'd say, okay, how you justify this toy? So anyway, I hold people accountable. They want to be held accountable if they don't want that advice. So, we're not going to do that. But
Do they kind of treat you like the wife there? Like, don't tell Mark about the
yeah,
boat.
exactly.
Don't tell Mark about the boat.
But those are people that said, here's my plan, Mark. I want to work this plan. And so every year when we meet, where are you at on your plan? What are we going to do to work towards that plan? So without a plan, you're not going anywhere. I mean, I've seen people lucked out in business. I've seen people come in, didn't have a clue on business, but picked a good business to get in and make money. But the average person has a plan and is working their plan.
Gotcha.
What are some how do you navigate or tax strategies and things that put people in best situations regarding tax, pre-tax, and all that type of stuff?
Well, we were 80% of our business is small businesses. So the first thing with that is getting set up right with the right LLC. Many people come in and they try to set it up themselves, which is normally always wrong. They did it online because it's cheaper. I'm saying, an LLC is going to cost you $700, but it's set up right, and you're going to save. You're going to pick that money up. Don't stumble over $50 that cost you thousands over a lifetime. So first off, it's making sure you have the right business model tax-wise. And you got to find somebody that can do that. That doesn't always mean your CPA or your attorney. If an attorney and a tax attorney, and you go say, I want an LLC, he's going to give you an LLC.
Mark, your microphone went out. Push that cord in.
This one?
Push it in.
Talk again? Is it on?
Okay, we're good now.
Okay.
All right.
Sorry about that.
That's live TV for you.
So basically, you want to make sure you get somebody that understands what LLCs are correct for your business. May not, what we see lots of people do is an S Corp. Everybody's saying do an S Corp, do an S Corp. Well, that may not be the best situation for you. So I would, the only time I use an S Corp is with a single person. Use a partnership. So again, it's getting that set up. Then if you're an individual, I'm saying, are you maxing out your 401k? Then we're going to look at other avenues of investments. If you're a business person, do you have a SEP? Do you have which is a simplified employee pension plan, or are you doing one of those things on a consistent basis? So it's always putting money aside for yourself. But we always start with a business person or even an individual. Let's minimize taxes. There's one of the easiest places to pick up extra cash.
Ultimately, I think that's the goal for everybody, right? Minimize the taxes that they pay.
I hate paying taxes. I mean, when you see how they waste it,
Yeah.
it really drives you nuts.
Amen.
Now, individually, Mark, you were talking to me before we went on live here about a new tax deduction.
Yeah,
That was interesting.
The exciting thing is, again, we all have heard no tax on tips, no tax on overtime, which is phenomenal. I mean, and again, you're going to see people. We're already seeing people. How do we situate? How do I get my pay to where a lot of it's overtime? So they'll work those bugs out. But there's also, for the next 3 years, somebody over 65, there's a $6,000 deduction per person, up to, I think it starts to phase out, I think, at 150,000. I don't have all the details on that, but I'm excited about that. 12,000 right off the top. That is fantastic. So that's something they've added. So you want to make sure you talk to your accountant. He should know that. Yeah, your CPA or accountant should know that. So, and then there's just other things for businesses. with pass-through entities. There's a pettit tax. Anyway, you want to make sure you have an accountant that is good and is up to date on everything. They should all go to a seminar. There's a seminar that they're all supposed to attend, which should bring them up to date on the new tax laws, the new law that went through. I'm not a CPA. I own part of our tax firm.
I do have a question. So I know we discussed the up and downs of the market and the volatility of it, and pretty much with it being up in the air. From my experience, with the clients that I work with on a daily basis, typically, they are very risk adverse as of right now. Of course, getting into the market with the uncertainty of what could happen. Of course, I'm seeing a lot of people shop around for money markets and CD rates. What type of advice would you have for those people that are on the fence about getting into the market just because they're unsure of what could happen?
Well, again, to me, that goes back to have a plan. I mean, if I have a plan and I understand, okay, I've got this much safe money and here's what I'm going to put in the market, understanding that I'm going into the market and I'm going to ride out the risk. I know that there's a possibility of losing money. And so to me, that's what you do. If you're diversified, then you're saying, okay, this portion of my money I know is at risk, but I feel comfortable because I have other options. But if you got somebody that's adverse to the market, then they need to look at safe money. Either they do an annuity, they do life insurance. There's some really good money markets out there. Shop for a money market, and then just ride it out until they feel comfortable. But I got people that don't put any money in the market. I mean, that's just their choice. So, but what Ryan said is true. Ultimately, you're going to do well in the market if you stay in. If you try to guess the market, you've seen plenty of stockbrokers and stuff go broke trying to do that. So it's just have a plan and say, okay, I understand that 20% of my money is going to do this. And I just tell people, well, just don't watch it. When do you need it?
Mm-hmm.
Well, Mark, I don't need it till 65. Then why are you watching it every day and stressing out? We'll evaluate it at the end of the year and see where you're at. So,
Do you do anything with monthly dividend stocks?
I don't understand what your question is, JJ.
Monthly dividend stocks, things that pay monthly. There's some different areas. I heard some people.
Well, yeah, you work with our broker. We're in a network. So that's the platforms you're choosing.
Okay.
What are you choosing? What is the income? Do you want income? Then you may do something like that with the dividends. But again, what are you choosing to do? And then you meet with your broker, and he's going to help you determine if you need income, if you need dividend income. I had one lady that bought, what was the stock? Amazon, I think she bought bought it at $1, kept it, never did anything but took the dividends on it. Now again, it just sat there, and once we got her, we started to diversify it. But she just lived off the dividends, and she bought it years and years and years ago and became a millionaire doing nothing more than sitting
on Amazon stock for 15, 20 years, right?
Exactly.
Yeah.
Never did a thing, just sat on it.
Mm-hmm.
And came to us and wanted to start diversifying. Well, again, then if you're selling it, you got huge gains that you're paying. So we had to work out that. But yeah, again, JJ, that's just all. What is your goal? How are you wanting to receive income? Is this, you're talking to your broker and saying, is this going to pay dividends that I can use or reinvest? Those are all conversations you're going to have depending on the platform you decide to choose. But I encourage, go ahead.
I was going to say, so essentially that's just an investment strategy for certain people that,
Yeah.
if we're needing to supplement our income in retirement stage, right? We're no longer working, make the same level of income. We got Social Security coming in. We need to generate more income. You're going to look at more of those investments with companies that pay dividends, right? So
Right.
they're receiving, quarterly dividends or
yeah, they
money
can be
coming in that's
however,
generate
yeah.
income for them to live off through the year, right?
Right. And again, you're just, when I say you got to have a plan and work the plan, whatever you're determining to do.
So, coming up on our time here, but you mentioned something earlier in regards to tariffs. We didn't go deep into that. Do you have much insight on that, tariffs, and how that's affected the economy, the market, things like that? I know tariffs are a big, scary word nowadays.
Well, it's also in the Supreme Court. We don't know how it's all going to come out. I mean, I looked at it, and again, I don't understand all of it. I understand ultimately what's trying to be done to make things fair. But again, you got a tariff that costs me more as a businessman. The average business person is going to pass that on. So until it all fleshes out. So, no, that's all above my pay grade. That's we'll wait and see how all that shuffles out.
And then last question I have for it is when we're talking about investments and stuff like that, do you have much thought or insight when it comes to investing in the crypto market?
No, that's not anything we do. I have lots of people, even relatives.
What's your just personal thoughts in regards to that?
I think ultimately it's going that direction. I think you could see where ultimately there's nothing but digital. I think that's where they're going to try to go to, which I think can be good, but also scary. They can monitor everything I got. If it's all digital, then they can monitor it, they can control it. So, I have some hesitancy. I'm a guy that likes nobody to know what I'm doing but me. If you're in that digital realm, everybody, they're going to have control. It's like medical now. I go in, and my records are there for anybody to see. When I go into the drugstore to get medication. They got my phone number. They got everything. They know what I've been on. It doesn't matter what drugstore I go to. So I think it's ultimately going to go that way. I got people made a lot of money doing that.
That's the kind of reason I asked that question is I kind of like to hear, financial advisors' insights on that because for our younger listeners out there, we're talking about getting them interested in investing. A lot of them nowadays, that's what they're interested in investing in is the cryptocurrency because that's the trend thing, right? But understanding they're not so much looking to invest in stocks, but understanding what the difference is. What are you investing in, right? What are you investing in when it's a cryptocurrency, right? Bitcoin, Ethereum, Dogecoins, right? Is there any true value to that? Right? Or is that you're just playing the momentum right there and hoping to strike you rich rather than investing in a traditional company that actually has revenue and producing dividends, right?
I got more stories of people that lost money in that than have made money, Another thing that I would encourage you to look at is gold and silver.
Even at today's prices?
Yeah. I bought silver at very low levels, understanding that it's going to go up. Think what silver's in. It's in a ton of the electronic stuff. And so, again, that's another part of your portfolio is buying gold and silver. Again, it rides out the market. I mean, if you think about it, I think like in 1930, you could buy a car with 20 gold pieces. Today, you can still buy a car.
20 gold pieces.
Think about that inflation-wise. Now, gold and silver goes up and down, but it is liquid. I would encourage you to make sure you're with a good broker. I wouldn't go into Walmart or someplace and buy that. I'd make sure you got somebody where you can, where I buy it, I can send it back in and liquidate it. You don't have to go local. If you're going to do that and go local, you may want to have some guns in your safe because they may follow you.
I just had this conversation about gold and silver with somebody recently that brought some insight to me because traditionally gold and silver has been used as a hedge against inflation, right? I don't know if I'm saying that correctly, how they use it, but what is it? Typically, market's down, you invest in gold, right? In uncertain times with the market. Yeah. But nowadays, it's not necessarily used for a hedge against inflation or the market because gold, all the stuff they're doing with AI and chips and all the stuff that gold's in, that stuff's way up, right? So the actual usage of gold now has more value, right? Because it's going to be used in more things. So that's where, from what the gentleman I was speaking to on, is like that's where you see the real value, and it's not really a hedge anymore. It's up, but it's going to be used for a lot more things.
Yeah, and I think it's always going to be worse. Some people say, well, if everything crashes, well, there's still going to be people that will take your gold and silver. I don't care how low things go. But yeah, you're right. There's just a different market in that. But again, that's just another piece to look at in your portfolio as diversification.
Mm-hmm. So before we get out of here today, this is our last episode before Thanksgiving. So, Mark, what are you doing for Thanksgiving?
We always do a family thing. Although Thanksgiving's never been my favorite thing. I don't like turkey.
Me either.
Never have liked turkey. So growing up, we had ham and turkey. And then I married into a family that didn't like turkey. So that was a good choice for me. So I didn't have to suffer through that. But sometimes Thanksgiving can be good, but it's also the time when you have to meet with all those relatives you don't like and spend time with those.
You don't have any of those, do you,
I hope
Mark?
they ain't watching.
Yeah, I don't think any of mine are watching this, so I'm safe to say because they all come from out of state and stuff. But it's fun. No, we do a good family time together with my son and his family and his wife and her family. So it's really a good time. We have a good time.
Awesome. Terrence, what about you?
I will be spending time with my immediate family. We don't really do the whole turkey ham thing anymore. It's
Good for
kind of
you.
pretty much a potluck. Just bring what you want. We kind of do that. Kind of broke away from the tradition. So I would say it's kind of nice to put our own spin on it.
Mm-hmm.
That's good.
JJ?
Yeah, likewise, spending time with family. But you say you don't like turkey, Mark. You come to our house, you can have plenty of options. They got turkey, ham, fried turkey, roast
3
turkey.
different types of turkeys.
Yeah, chicken. It's a spread. I mean, you eat till you're sick. But my favorite is the oyster dressing. I look forward to oyster dressing.
Dressing.
On Thanksgiving. It's to die for.
Interesting. Awesome. So,
What's your address, Jim?
yeah.
Hey, we'll be up at Coldwater this year. We're going up to the lake. So
Oh, wow.
yes,
Yeah.
yes.
Myself, not doing much. Just my immediate family there. Wife's side, they go to Florida, and which is good for me because not that they're going to Florida, but I don't have to go to multiple families and eat turkey multiple times because I'm in the same boat. I hate traditional Thanksgiving meal. I can stay home and I can cook what I want. We'll probably have steak. Ultimately, for me, Thanksgiving is about being a Lions fan. The Lions play, and now I actually have a chance to root for them. So I'll be watching the Lions whoop up on the Packers on Thursday. That's what I'm looking forward to.
So they won't officially be the turkey this year. You're right.
Yeah. So, but great conversation, Mark. It was great having you back on the set. Gentlemen, happy Thanksgiving to all of you, and happy Thanksgiving
Likewise.
to all of our viewers out there. Thank you for tuning in. We'll be back in 2 weeks. Till then, we are Our Neutral Voices. Peace.